RationalInvestor.com's Daily Brief Recap. I'll try and get this done in a good 10-15 minutes. See how we do. Of course, Brian loves the sound of his own voice, so let's get to work. Did you just send me another bling, or maybe somebody else did? I get blings all over the place now. All right. Put together a cute little chart deck here for you this morning for the free offering. And actually, we talked quite a bit about all of this stuff in the daily brief here today, so not a bad dovetail. We should always start off with our conversation with what the heck's the US dollar index doing. We talked recently about a potential weekly fractal that might be coming in. The talk that I'm hearing out of US Fed officials is sort of like, well, the U.S. economy is the strongest economy right now, and we're really worried about global growth, so that's why we cut interest rates. But domestic situation here in U.S. is relatively good. And I might make the argument that the domestic situation within Canada is relatively good. Canada, of course, is USA's shopping market. So on balance, I'm hearing that sort of the tide in North America is relatively positive, but it is international markets that's concerns. So it really shouldn't surprise us that the US dollar index has not broken down here. The growth out of China, the growth out of Europe is still very much in question. And so I think it's just a big hurry up and continue on. As well, the Fed came out and said that they really didn't like the idea of lowering interest rates too much more. With the spread, the differential between U.S. rates and even European or Asian rates, there's not a heck of a lot of incentive not to own U.S. dollars. And even the Canadian dollar doing relatively okay here. Its interest rate differential between a lot of the European nations still pretty positive in Canada's favor. So it makes sense why the US dollar index here is relatively uppy. That in itself, unfortunately, is a sort of fear vote, right? I'm going to just buy US dollars, park my money in US treasuries or T-bills or whatever, and just ride out the storm. We'll talk a little bit about that more in a bit, but long and short of it here, no breakdown in the US dollar index this week. Did actually a really cool analysis of the oil market yesterday. Put a tweet out to this. Of course, what I find fascinating is this is incredibly valuable information. And I just wish the public would get to the point where they actually learned this stuff and they respected it, because it's such a huge tell. And yet the irony of it all is when I put these kind of tweets out, nobody's interested in this stuff. Squawk about Bitcoin and, all hell breaks loose on the tweets and retweets and likes and stuff. I talk about things like derivatives open interest and how the 1% basically owns the market and they drive it around at very specific levels, and nobody's interested. But spend some time in the daily brief today talking a little bit about how there is a massive incentive for Wall Street to keep the price of this U.S. oil exchange traded fund above $12. In essence, there's about 300,000 put options all in this area. And, I often wonder whether that drone attack in Saudi Arabia and stuff was awfully coincidental. It gave the market the reason to get above that $12, and you can see how they're fighting like a dog to make sure this market goes out today above $12. The irony of it all is that once the options expiry gets done today, and keep in mind today is like a quadruple witching, huge event here in derivatives land, I might make the argument that literally once this is done, first thing Monday morning, this thing can just crater lower, and Wall Street is pleased as punch. And right now, just even at this $12 level, there's something like 100,000 put options. So it's firmly, in my opinion, that number one, on Fridays of these big monthly and quarterly options expiries, most of the business is actually done the preceding day, Thursday, and Fridays themselves are relatively quiet, and we can kind of see that if we look at our risk on, risk off matrix, wherever the hell it is around here. You can see things are relatively quiet. Gold's catching a bit of a bid, so that's good to see. But yen's relatively quiet. Bonds are quiet. Actually, stocks looking a bit heavy here. But there's that crazy oil just parked. We did look at the options on the stocks, and interestingly enough, the biggest open interest on the puts is actually down at like 290 on the S&P. So we could actually see that market come off here a bit, and you can see it is coming down. I would have thought, there's some massive call open interest just above 300, so I can completely understand why they didn't want the market to come down or be above that 301, 302, 303 area. But I'm actually a little surprised to see that we are dipping as aggressively below 300 as possible, because there are quite a few puts here up at like 300, 299 kind of area. So we'll see how the day ends. I have been talking about accumulating put options for this cycle peak that I'm expecting here in the 25th, 26th. And interestingly enough, we have an old expression in the market. What are you supposed to think if you ever see the market smiling at you? And you can see here there's a bunch of examples. So we got here to here to here. Uh-oh, smile, look out below. Here to here to here. Uh-oh, smile, look out below. So lo and behold, look at what we've got forming here. And what's interesting too is if you change this to a line chart, the smile's actually already in. So I do like the idea of having a bit of insurance, and our cycle thesis is suggesting that the cycle we should hit some sort of stock market peak around the 25th, 26th. So what a surprise. We're actually starting to see anecdotal evidence of those tops coming in. But at the same time too, and I'm a bit surprised that the stocks are breaking as they are here, but I'd be a bit surprised if this thing really gets going in earnest through today. I still think that, especially that oil example, that was a really good example. I still think that there's enough vested interest from Wall Street to sort of keep this thing parked up here. I'd be really surprised if it tanked hard. All right, heading over to crypto. We had a very smart counter trend rally coming out of Bitcoin yesterday. We talked a little bit about this in recent daily briefs. I'll just use Coinbase here just as a simple example. Was this it? No, I don't think this was it. This was it. So we had several peaks, 1, 2, 3, 4, 5, 6, 7, 8. We had the end of the Fed event, right? And I personally think that Bitcoin loves to move right after a Fed event. That painted this crazy ass AB equals CD target down here. Never did get there. I'm sure I talked about this in the free video yesterday. I know we talked about it lots on the site. People that did have shorts working, we had move stop to trailing levels hit, and you should have been politely told to exit those shorts on this consolidation and then the breakout here. What's fascinating about this, of course, is that we haven't really done any serious technical damage to these old highs, right? And this is why I like with the bot, we have like 3 highs to work with. 1, 2, 3, 4, 5. So what I see is that this counter trend rally went out and ran these stops. But you notice, did we actually take this high out here? That's 10,355.03. And the high here was 10,379. So they were able to take this high out. But this one up here, 79.98. And our high here was 79.15. So they couldn't even get it up through, ironically enough, 1, 2, 3. Those are our 3 original highs, and the original M structure top failure here. That's actually our bot, 3 highs level. So they just cleaned out all of these. And then you notice that, oh crap, especially just right after the big blast off. Hopefully you can see, I just talked about this with the stock market. What are you supposed to be thinking if you ever see the market smiling at you? Right? You can see that after that blast off up, and actually even really this big one now, right? We're back into bear mode now. With the bot sort of being taken off the table there, I'm sort of left just sort of like in no man's land right now. And frankly speaking, when I look at this chart, I'm still feeling very sort of no man's landy. Um, I might argue top of the range is all the way up here. Bottom of the range now happens to be down here. Since these highs still technically are working, this downside objective is actually still perfectly valid to me. But if we look at the daily chart, what I just see is more range. Nothing's really changed here. If we start accepting back above trend lines here, and then putting in structure on the other side of the trend line, all right, maybe we got something to work with. But as it stands right now, the way that I'm interpreting yesterday's price action, and actually I saw John Bollinger also mention this on the public feed on Twitter there earlier today, was this pretty much looks like a head fake, right? So we went down and then, whoa, all right, head faked our way out of there. Now remember, when you're in a trading range like that, that's exactly its job. Its job is to go after the stops, right? Really good example here. Are we going to M out and then, whoa, no, let's bust those out. And then are we going to W out here? No, we're going to head down. What I would say is this one bar is actually a fairly significant bar in itself. Almost a hammer. I think actually, I can't remember the name of it just off the top of my head. I want to say things like, what the hell's the name I'm thinking for? Anyway, I can't remember it just off the top of my head. But very hammer-ish in that we have this huge tail. We tried to close right up at the top of it, and really now, hopefully everybody can see that the resolution of the market above this level here is actually a relatively bullish signal. So one day, it's tough to really make the argument of bull bear. I still think when I look at this that we got the top end of the range up there and the bottom end of the range down there, and we're still just playing. The fact that we did go to new lows here this morning, or I guess yesterday, does mean that this M is still working. On balance, I can't really call reversal until we actually fractal out. And that would just simply, at present, what I see here is this is a cute little diamond. So, if you are watching the price action very closely, of course I got the magnet on, can't do that. If you're watching price action closely, the diamond looks like this. And it's messy, don't get me wrong, I'm not saying this is pretty. But I think it looks something along these lines. As it stands today, what we really have to do is we have to watch how this candle finishes. If we can hold these lows, right, and then turn around and tomorrow tick up through these highs, that actually is a nice little diamond reversal to the upside. But it's, as it stands right now, especially with the options expiry, I think we're probably just going to see the market sort of go out somewhere in here. Let's see how much of this tail. You can see we've gone into the body of yesterday's candle. So we are exploring this tail, and the old adage, wicks and tails like to be eaten. So I think you can make the argument, unfinished business up here, unfinished business down here. And as it stands right now, basically I'm just sitting on the sidelines, just waiting for the next formation setup to develop. Now, with that in mind, I think it does make sense that maybe we got to see, things like dominance. Maybe, markets never move in one direction forever. We had a pretty big dump in one direction. Could we get a bit of a pullback here? Sure. No, it would be realistic. And then conversely, this is X Bitcoin. I never know the correct definition of this, but I'm just going to simply say, looking at this chart, could we get a correction of the original breakout level? Absolutely. This, if anything, is our perfect analogy of do not chase. And for fun, and just an update on those two little setups that I was squawking to the public about. The Ethereum trade has moved to the point where, oops, that's Litecoin, where if we apply the bot trading metrics to the chart, you can see we have had 50% of the anticipated move tagged. So at least you got to have your stop at scratch. Don't let a winning trade turn into a losing trade. But my hunch, and if I draw 38.2s off of this rally peak, notice that that was yesterday's panic dump low. Wicks and tails like to be eaten. And my hunch is we could very easily consolidate in this range. Screw the late FOMO buyers. Give sort of the shark traders a nice little level to work off of 38.2. And we consolidate this a little bit. And as I said, if we consolidate and crap out, then I think this setup, at the very worst case, you just walk away at scratch. We can start trailing stops if we get up into this sort of 330 area. And given it's the weekend coming up here, crypto frivolity, we could very easily see this bang around. But for the time being, I'm just sort of stuck with looking for a trading range. And my stop has to be at scratch. Interestingly, on the Litecoin, we haven't gotten to that level just yet. So had you taken this Litecoin setup, I think, bot trading rules, you're still taking the original risk off of the double bottoms, triple bottom now here. We haven't even gotten to the point where you can move stops to scratch yet. So, again, sort of thinking that sideways-ish type market. I think there's like a brick wall of support now building up here on Litecoin around $70. But, at the same time, too, I did this kind of fun study with the kids in the lounge here this morning. And I just sort of said, this all looks very symmetrical. So, think maple leaf, think Canada flag, that kind of thing. Markets love to move symmetrically. Think of a head and shoulders pattern. Actually, in the daily brief today, we took a look at this symmetrical pattern happening in the gold market right now. And we just took our symmetrical study and said, okay, well, if the market follows the same sort of path, what should that sort of resolution on the other side, if this market is moving symmetrically, what should that look like? And you can see to a certain degree we are basically following that pattern. So if we do the same logic to Litecoin, in essence, I just drew from this pivot point here back to this rally peak here, then that's what this price action is. Then you just flip it over. So it's actually a complete mirror, and I just sort of drew right off of that pivot there. Does the market actually look like it's behaving symmetrically? And it's interesting how we had a counter trend rally. We had a pullback, just like the symmetrical study suggested. Then we had another rally. And then notice we're in sort of this window here where we could go sideways for like a week or two. And so through the daily brief today, and that would be sort of that conversation about things like, dominance cleaning itself up, coming back down test lines. I could very easily notice that these lows off of this consolidation period happen to line up with the breakout level. Notice, like if I just draw a horizontal line, right, you can see how that lines up. Boom, 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 boom. So, really good analogy. For heaven's sakes, do not chase. Don't chase these markets. Work your bids at reload zones. And like I said, I'm kind of thinking that I think, if we're in this sort of phase right now of this market. And we could very easily see, a week or two of just sideways here. Now that everybody and their brother is all bullish of crypto, the one thing that would be absolutely perfect would be just the market just goes dead again and drives them all crazy. So with that said, we'll finish off today's video with just a quick conversation about, all right, so I've seen some of my coins. I see like this BATT we talked about in the daily brief today. It has a gap at 50% level, original market structure fail level. Not a bad objective, 29 cents going forward. I do have signs of a bottom. We've got horizontal support and resistance off of key lows here. Somebody stepped in and bought this thing every time it got down into these levels. You can see we do have W's working here, and I like this one because it rallied right up to this rally peak, then backed off, then rallied up to the peak again, then backed off, and then pow, blasted through it. So does that mean that I can go and buy this asset up here? Absolutely not. And if we get, of course, like a 2-week consolidation kind of idea and some of the bigger names, could we see a nice little pullback into reload zones? You can see the very noticeable gaps on this chart. This just happens to be one example. There's tons of them that we looked at that all look very similar. And this is the kind of market where I think you have to just be patient and disciplined and work your orders at the original breakout levels. There's no hurry here. It's your money, right? And you decide what price you want to pay. Don't go and emotionally make decisions and chase. And we left off the conversation today with just a really good example of what happens to people when they go and chase. And you get crazy situations like this, right? Where, this one didn't even really put in a very good looking bottom, so we figured it's going to have to come back down anyway. Now you can see it's painted an inside bar, so this is actually a sell signal right there. And all the people that FOMO'd, wicks, trapped bulls, they're going to be trapped there for a while. So for heaven's sakes, people, do not chase this market. Okay, I think I'm going to leave it at that for today. Hope you got some good value out of the offering. Gave you a few different ideas to think about. And we also even talked a little bit about the broader market and a really good lesson on options open interest here heading into options contract expiry. All right, have yourselves a great day, everybody. All the best, and bye for now.